Hello everyone. Today is Thursday, March 12, 2020. Yesterday, we just talked about the end of the longest bull market in US history. It is getting even worse today. The sell-off in the US stock market accelerated. The Dow Jones index fell nearly 10%, 9.99% to be exact. It is worse today since the Black Monday crash in 1987, which is 33 years ago. The S&P 500 tanked by 9.5% and the Nasdaq tanked by 9.4%. Both S&P and the Nasdaq now officially joined the Dow into the bear market territory. All three major indices are down more than 16% for the week. And the bad news is, this week is not even finished yet. At the end of the day, the S&P 500 plummeted by 27% from its record high and wiped out all of the gains since the end of 2018. If you look around, the news was even worse overseas. Canada's main index was off more than 12%. Its worst today since 1940. Europe's benchmark index suffered the worst day in history. Brazil's index tumbled as much as 20%, extending the year's loss to almost 50% in dollar values. Today, all three major market index triggered the 7% circuit breaker rule very shortly after the markets open. So the market is halted by 15 minutes. After market resumed trading shortly before 10 a.m. Eastern Time, the US stock plummeted even further. Just 3 days ago, I said that on Monday, there are only 2 instances of circuit breaker in US market history, and we have to trace back to October 27, 1997 for the last circuit breaker event. You have to live long and to see it. And today, someone said there are only 3 instances of circuit breaker in US market history. And we have to trace back to March 9, 2020 for the last circuit breaker event. We can all vividly remember that day, just like a few days ago, because this is a few days ago, just 3 days ago. In the derivatives market, the US futures tied to all 3 stock indices fell to their maximum allowed decline of 5% before the markets opened. This so-called limited down is the futures market's version of circuit breaker. Well, I will skip about the circuit breaker's rule and its history. If you are interested, I have another video just for that. This very sharp fall in the stock market is because of the rising fear of global slowdown due to the rapid spread of coronavirus. On top of that, the stock market already has some underlying illness. It rises up too much and too quick recently, causing some bubbles. It relies too heavily on the stock repurchase and its ultra-low interest rate environment, and also the high leverage. The first few points is probably common knowledge now. As regarding to the high leverage, today there's a pretty interesting story. The CNBC's Mad Money host, Jim Cramer, stopped right in the show on live TV to take a call. A rumor said Jim got a margin call, and he has to answer that. It turned out it's a call from the White House after Jim urged the federal government to take some action. But you got the idea. This leverage will force people to sell more, and that will accelerate the market sell-off. We are in a fear of this very recession, and this bear market is further feeding on this pandemic of fear. The fear index of VIX closed at 75, the 4th highest close ever. The top 3 are all at the peak of the last financial crisis in October or November of 2008. This type of fear caused very dramatic reaction from the investors, and dramatic reaction in turn will cause more fear. There are amount of news information from Wednesday night about economic fallout of coronavirus globally. In just a few hours, President Trump announced a 30-day ban on most travel from Europe to the US. Follow that, we learned NBA will suspend its season indefinitely. And then we know the music festival of South by Southwest is cancelled. And also an increasing number of universities and colleges now suspended their in-person classes. This fear factor is spreading very fast as the virus, and no need for touch or air spread. Companies most exposed to the coronavirus outbreak were particularly hit very hard, such as the airline industry and cruise industry. Well, given what happened to the Diamond Princess cruise, it is not a big surprise to see a Royal Caribbean cruise plummeted by 32% today. For the airline industry, United Airlines dropped 25%, Delta dropped 21%, Spirit dropped 33%, and the airline index has been cut in half over the past 15 trading days, the largest 15-day decline since 9/11. This is in the backdrop of the massive crash in oil price since Saudi Arabia kicked off a price war with Russia last weekend. The crash of oil supposed to benefit airline companies. So this is suggesting uncertainty about the virus outbreak are now become the biggest investor concern. At the end of the day, all 11 sectors of S&P 500 tumbled. Even companies that investors thought could possibly benefit from the virus. For example, Colorex, the firm produced cleaning product, ended the day with 6.3% down. Even Gilead Sciences, which started testing a virus treatment, fell 6.1%. Existence and non-existence lies upon each other. So in this massacre, 3 market boosters have also been developed. The first one, President Trump outlines a series of steps of fiscal stimulus to backstop the economy with, proposal like payroll tax cut, helicopter money for each household or U.S. citizen, and delay of the tax day. Secondly, the European Central Bank said it would roll out cheap loans for banks and step out their loan purchasement. Third, and the most dramatic, the Federal Reserve in the U.S. announced an unprecedented plan for $1.5 trillion intervention in short-term funding market. The fast action is very dramatic and has long-term implication to the market. I will probably have to do another video to talk about that. However, the steep losses in stock market today underscore that so far, none of the 3 developments calm investor down. The bottom line is that all economic and financial forecasts depend on the course of this virus pandemic and the resulting pandemic of fear, the fear of the unknown. Well, that's enough for today. Thanks for listening. Let's stay safe and healthy. See you next time.